More and more, I see that people are realizing that writing off everything on your taxes may not benefit you the way you think it does. If you want to know the three ways that writing off everything on your taxes can be harmful to you, more harm than help, then keep on watching and I'm going to give you those three ways. Hi there, guys, and thank you for joining me at the Financial Spotlight. I'm Chantel, and I'm here to give you financial tips and tricks that are going to help you on your road to know your money. And today, I'm talking about the three different ways that actually writing off everything on your taxes can be more harmful to you than helpful to you. And I've talked about this previously in a couple of reels and videos and all of that, and I will link the video in the description box that I talked about it in depth. But I just want to come back on here and just talk about it again in a way that people can probably understand it a little bit better, so that you will realize that writing off all of the deductions that you can and making it to where, oh, I don't owe any taxes, but then also I don't have any income from my business, it's not going to help you that much. And let me tell you why. First and foremost, when you write everything off on your taxes and you have your business income and then you have your business expenses, and if they outweigh your income, that's fine for the first 1 year, 2 year, third year. 3 years is fine for you to be running a business as a loss, right? But then when you get into your fourth and fifth year and you're running a business, then there's something wrong. This can't be a business. This looks more like a hobby, right? So what you need to do is you need to make sure that you're not trying to write everything off on your taxes, because number one, it's going to hurt you when you try to make purchases. If you are intending to purchase a house, a car, you want to buy property, if you want to buy things to go into your office, say you are looking to lease a location and you need to show them that you have income in order to pay for that location, right? Even if you're not purchasing it, even if you're trying to lease a location, you do need to show some type of income. When they look at your income statement and they're saying, okay, this is your income, but then your expenses are the same, and then they ask you for your tax returns, and then they're looking at all of your financials and they see that in essence you didn't make any money, then that is not going to help you. And then they'll probably turn you away and say no. So you do not want to sit up and write off all of the things you can find if you don't need to. Now, I can understand, like I said, if this is your first year in business, you're just setting everything up, you've paid for all these things and you've been purchasing all these things, and yeah, you will have to write off a lot of things. However, you don't have to continuously write off all of those things. And I'm going to link to the video down in the description box where I talked about the 5 bank accounts that you should have for your business and why you should have them. And one of those bank accounts is your income bank account, so that you can show how much money is coming into your business. And you can also show an investor, you can show people where if you want to purchase something, if you're trying to rent something, lease something, buy a home or whatever, a car, that will show your income in that account. Okay, now the second reason why you don't need to write everything off on your taxes is because if you have been in business for a while and then you have credit cards and you have business credit cards, and also if you have personal credit cards and they are depending on your income that you're making for your business, especially if you're self-employed or if you're a solopreneur or if you have a business that's thriving with a few employees, etc., Your credit card companies sometimes want to do an assessment of your availability or your ability to pay these credit cards. So there's a periodic review, and when they do their credit periodic reviews, then you need to make sure that you're able to show them that you have a good amount of money coming in. They want to see your tax returns. They're not going to just look at your bank account and see what's coming in. They're not going to just look at your payment history of how you've been paying on time every month, etc., etc. No, they're also going to want to look at your tax returns. So you have to have all of your ducks in a row. You have to have all of your paperwork together. And in order to have all of your paperwork together, you need to make sure that you are not increasing your expenses and reducing your income to make it look good so that you don't owe your taxes at tax time, but also so that you can make sure that you're able to pay and that they know that you're able to pay them. So that's the second reason. Are you still trying to figure out exactly what you need to write off on your taxes? Well, don't fret, because I have a free, yes, I said a free tax deduction list, plus a guide to guide you through and tell you every single deduction and exactly why and how you write it off on your taxes. Go ahead and download that today. Link is down below in the description box. You'll thank me later. And the third reason why you want to make sure that you're not writing everything off on your taxes is that you do not want to go through an audit. I have a link to my audit video down in the description box where I talk about the 8 ways that you need to avoid the audits. And one of them is writing off everything on your taxes. I'm trying to tell you, do not raise a red flag for the IRS to come and find you, and then they find out that you actually should not have been writing off all of these expenses, or that your expenses are excessive. And it just brings attention to you when every single year you're writing off all of these expenses. And just make sure if the expenses are totally 100% legitimate and they do cancel out your income, then maybe you need to be thinking about, maybe this isn't necessarily a business. Maybe this is a hobby. Maybe I should reclassify this as a non-profit organization, something different than a business, because if you have a business, at some point you're going to have income coming in, and it's going to be a steady amount of income so that you can, one, make sure that you are able to purchase things and verify that you can pay for them, two, able to continue to have your credit cards and your credit increased, or make sure that you pass the preliminary reviews of your credit or the periodic reviews of your credit cards, and three, so that you will not go into an audit or be audited or raise a red flag to allow the IRS to come and audit you. Because let me tell you, an audit is not a pretty thing. When you get into an audit, now you're going through every single paper, every single receipt, every single bank account, everything that you have reported or that you're supposed to have reported on your tax return. It's not okay, and you have to get a representative to work for you, and it's just a whole can of worms that you're opening. So I hope this information has helped you, and that you will know exactly why you should not be writing everything off on your taxes. Go ahead and take a look at the videos that I linked in the description box, and if you have any questions, comments, or concerns, make sure you put those in the comment section. I will answer them, and I love to read your comments. They are awesome, so keep them coming. Thank you so much for joining me today, and have a great one. Bye.